I think the plans for the build out have been reasonably well known. So for people who are looking at the SpaceX equity IPO, they had a really good understanding of how much money was going to be spent over the next handful of years. And quite frankly, you can't have negative free cash flow that's 20, 30, $40 billion annually without access to low cost, cheap capital. A big pool of that was equities. They raised $85 billion of equity, but they're probably going to need another $100 billion of debt. So if you had plans to borrow that much and thought you can do it in the junk markets, you'd be thought of as crazy. So I think this is pretty well understood. I do get it why people say, how are these ratings so high? And I think you just need to look into the future a little bit and look at the past. One is they're sitting on $100 billion of cash. Two is they're committed to IG ratings and reasonably low leverage. Three is their liquidity profile looks fantastic. They have access to huge pools of both equity and debt capital. And their burn rate, it's going to take them 3 or 4 years to even get through the amount of capital that they have today. So do you want to question where this company might be in 5 years and what leverage is going to look like? And are they going to be successful? I think it's a good debate. And I think when you're comping, are they an aerospace and defense company? Are they a communications company? Are they an AI tech company? That all of that creates, I think, more opportunity for bondholders because the bond deal gets priced probably wider than inherently it should.
There's definitely an Elon factor, a positive Elon factor in the equity markets. Is this such a thing with you credit guys who are a little bit more sober?
I hear so much about how everyone, in the AI world would rather just invest in equity because if they're right, there's huge upside. And with bonds, if you're right, you get paid back par, and if you're wrong, you get crushed. That's actually silly. Every basis point in the fixed income markets make a huge difference. And if you're coming at spreads that are 100 basis points wide to peers, that pays for the Elon Musk risk. I would actually argue there's Elon Musk reward. I know this, some people have cringed at this, but I think, Elon Musk is to today's generation what Warren Buffett was to the prior generation in terms of value creation. I think the future that he sees is a lot different than what a lot of other people see. I think his ability to execute is much higher than what people are giving credit for. Quite frankly, he does get a lot of credit. It's a $2 trillion equity market cap. So, for everyone who wants to poo-poo all the risk, people are riding the Elon wave.
Okay, so the bond market is giving Elon Musk the benefit of the doubt, it sounds like. Does the bond market give any other CEO, founder, company that same level of benefit?
Well, the difference between SpaceX and the rest of these other AI companies, we've said this so many times before, is the other names are basically the Mount Rushmore credits. They're double A's and triple A's. So they inherently have built-in credibility because they have so much financial flexibility. So what if Amazon borrows another 100 billion or if Alphabet borrows, 150 billion? The balance sheet's going to be fine. Here, you're starting with a company that doesn't have a lot of EBITDA. It's big negative free cash flow, doesn't have this long track record of success. So ultimately what happens? Listen, spreads are at historically tight levels. Everyone is looking for the next basis point to outperform. If you price something right, it's going to sell. These bonds look like they're going to be priced dramatically wide to triple B alternatives. So even if the long term, you think there's real question marks, in the short term, you're going to try to, get bonds. You're going to buy bonds now and ask questions later. And I think that's going to support this deal.